Hello, everybody. This is Michael from Spades Consulting, and this is going to be a more business oriented video. We are going to talk about why every single company inevitably has to become an investment bank. All right. So, we're going to start by talking about the auto companies just as a base level example. Okay. Now, obviously, to the average person, you see Ford, GM, any of the major brands as car companies. Okay. The reality is that's less of the business model. The majority of the business model is the banking side. Okay. Now, given Ford may be a little bit different, but one of the things going back to 2008, GM was particularly big on the banking side of the business. All right. I know Ford's got to be catching up now, especially when you're looking at fifty to $100,000 trucks. All right. Trying to get normal, everyday, small mom and pop banks, essentially, to do the paperwork, to accept these, to actually lend for these vehicles. It's not quick enough. You've got fixed costs, you've got hard costs, you've got inventory that needs to turn over. You can't afford to wait. Honestly, so like with the auto companies as the example, when turnaround is your primary concern, you have to become a bank just in order to provide the constant credit tap, the constant credit line. Because one, you don't want to wait on the local banks to do it. You don't want to wait on the small banks, and you don't want to share profit with the big banks. Okay? A normal, everyday regional bank, local branch to regional bank, they're probably going to lend at, 7, 8, 10, 11%. All right. Most of the auto brands that do their own lending, they're charging 15 to 20%. All right. They're essentially charging credit card interest rates on all of the new vehicles. All right. Almost regardless of the credit worthiness of the customer. Okay. There is too much money to be made on the lending aspect, especially when you consider that given um, compared to 2008, really the only things that changed, it was collateralized debt obligations. Now it is collateralized loan obligations. Whilst there may be a little bit more um, legal restrictions, it's essentially the same game. You take these notes. Once you issue them, you get them branded, A, AAA, B's, whatever. You pack them into investment funds, into collections, and not those collections. You collect them all into nice investable packages and you sell them off just like every home loan gets sold off, every auto loan gets sold off, every loan for heavy equipment is repackaged and sold into the broader market. You cannot afford, at least in the automaker's case, to not have a constant, steady supply of credit available. You cannot afford to just let inventory sit forever. Okay? And right now, perfect example, there are cars on lots that are 2 to 4 years old that cannot sell, that will not sell, even at steep discounts. All right, where dealerships were forced to hold a certain amount at every single model in the brand category in the brand line, and because of the pandemic, they just got stuck with inventory. And of course, quality declines has made the auto market relatively unstable and difficult, at least when it comes to the physical side of the business, the hard cost side of the business. But another aspect to consider and why going the investment bank route is not just a thought to kick around, but it's a necessity. You need control over the supply lines. If you start getting outcompeted by your competition, it would pay off very well if you owned your competition slowly over time. Okay? So, at the very least, even if your own business, assuming you're actually producing something physical, which is in the American economy a gigantic no no. Okay? Because actually producing physical goods, regardless of the type, the hard costs associated with that, on top of the labor cost and the general cost of business in the US, is too high that if you have to hold inventory for any extended amount of time, it destroys your profit margin. Okay. But in terms of securing your supply lines, you can do that through the market. You need to constantly hedge. All right. You want to ensure if you need certain raw materials, you're constantly playing in those markets. All right. You're constantly trading futures, you're hedging, you're making sure it's a necessity. All right. If you can't afford, let's say you do copper tubing as an example, if you need a solid supply of copper, one thing that's going into short supply globally, mostly because of EV manufacturing, is copper. You need a lot more copper for all those motors. All right. You need to constantly make sure that you have a steady supply. So you need a wing dedicated to focusing on those markets, to keeping track of the futures, to hedging against any potential rise that would put you out of any profit that you were trying to actually make. All right. Going forward from there, going forward from there, now given you have your hard costs and you have to keep those within a reasonable measure, and you have to, modern day, these days, you really have to hedge against inflation. So, like right now, well, let's rewind a couple of months. If you had invested a certain amount of the company coffers into gold and silver, you'd be doing pretty well right now. All right. Although that would assume that you hold on to it and you don't sell it, because the general expectation is that the price for precious metals is going to remain in a solid bull territory. All right. Expanding further. When you consider the hard costs of trying to expand a business, okay, the hard costs and the difficulty in trying to set up expanded manufacturing or trying to create another branch in the business. Maybe you want to make another part. Maybe you want to produce something else alongside. Maybe you want to take a waste material from one of the lines and instead of sending it to a scrapper to get rid of it efficiently, you've figured out that you can use it, reuse it in house. You can set up your own production process, and boom, you solid. You can take the waste from one line, turn it into another line, turn it into revenue, and stay within the 3 to 5%, which is the target for most companies. Once you get below that, heads start to roll. Considering the fact that many organizations, regardless of how solid your business model is, no matter how well you can sell to consumers, inevitably you reach market saturation. Unless you can come up with incredibly new, innovative products you're not, once you reach saturation in a market, you're stuck there. You can try to infiltrate into other markets with new products, but you're essentially stuck where you are. All right. You consider all your fixed hard costs. Well, not so fixed anymore, hard costs. You consider how quickly you have to turn over inventory. Once you reach market saturation, you can afford to sit there for a little bit. You cannot afford to stay there forever because eventually the inflation is going to eat away at the earnings. All right. And once you've already reached saturation, the only direction is either maintain or fall. All right. Once you start falling, then you end up in a deflation, essentially the equivalent of an internal deflationary scenario where you have to start laying off workers, which is particularly bad if you are considering getting rid of your quality workforce because you can't guarantee you're going to be able to bring them back. All right, if you have a layoff scenario. And then, depending on the circumstances, you might end up with a building that is completely empty, that is slowly rotting away, and the hard cost that is attached to that constantly eating at the bottom line. Now, generally, the smart thing to do, and that's why everybody produces overseas, you offshore that cost and you rent a factory instead of actually own it. You do foreign production because overall it's just cheaper and less risky, at least at face value. How do you grow once you've reached saturation? All right. And this is not just to maintain stability, but this is to ensure that your earnings don't drop. The only way that the only way that doesn't potentially increase your hard costs, the only way that will, it's really difficult to sell the idea of, okay, let's create a new production line and we're going to create this other thing. Okay. And then try to go out and try to market it and try to sell it for a decent price, try to disrupt another market. That's hard to do. Getting the company on board, getting investors on board, getting the CEO, board of directors, dependent on the structure, is very difficult to get them to commit to anything that requires physical action. Physical action, physical production. That's where all the risk is. It is fairly easy, though, to get most, if not all, on board to spinning up a company investment account. All right, where sure, you might not necessarily be able to grow the bottom line through the normal means, through attaining more market share by, investing in capital equipment and getting an actual return. What you can do is invest in, and this is not investment advice, this is just general example. You can invest in high return REITs, and by the end of the year, instead of showing a 3 to 5% growth in the business to investors, you get to show an 8 to 12% growth to investors, which is a lot more appetizing. All right, a lot more appetizing, a lot more stable, and it keeps everybody in their jobs. Okay, which is, I assume, important to you. It's important to most people, especially now. It's unavoidable, all right, just because of the standard market instability. It is unavoidable to not go down this road. You need to secure your supply lines. If your competition starts winning, You need to find a way to absorb your competition. All right? If there is a stall or shortage in demand, you need to be able to stimulate that through lending. All right? Now, given you're not going to lend for a bucket of fries or a bucket of chicken. All right? That's squarely up. That's squarely up to buy now, pay later schemes. But you can't afford to not. Slowly over time, every business has to do it. You cannot afford to grow a business or maintain a business without inevitably getting into investment and banking in general. All right. Honestly, the best position that any business could really be in is to go from being a business and transitioning to becoming a bank. Okay? Primarily because banks are too big to fail. Banks, the ability to lend out, well, currently, banks have the ability to lend out essentially endless credit. It's a really good position to be in, especially when you can borrow a fortune and use it to buy up the market and buy up cheaper raw material supply inputs and to buy up the competition. It just makes sense. It's good business sense, and it's how to keep a company operating. All right. And keep people happy. Again, this is it's undeniable. All right, trying to actually justify doing anything that isn't pushing paper around is really hard with most organizations. But pushing around paper that makes paper that makes paper that makes paper, um, that is a much easier sell. All right, you don't have to invest in new equipment. You don't have to invest in more floor space. You don't have to worry about leases, contracts, any of that. You just have to get a couple of analysts who actually know what they're doing and set up an account specifically dedicated to that. When the market gets rough, you pull out of the markets and you go into money market accounts. If it gets really rough, you pull it right back to the main account. And you just have a small team of the investment arm working for a reasonable rate to help hedge the entirety of the business against anything that could go wrong in the economy. It's a pretty good deal. I think I've made the point relatively clear. I'll end it here. This has been Michael from Spades Consulting. Now, I will say I don't do a lot of business oriented content. I tend to focus more on the consumers. But check back here occasionally for business oriented videos if you like what was said here. Like, subscribe, share, save it for future reference. If you're interested in written content, you can always check out the Substack, although that too also is mostly directed towards normal people. And I think that covers it. You guys have a good one. If you are interested in business consulting, stop by spadesconsulting.com and we'll get you set up. Have a good one.